How to invest $1,000 in the stock market and index fund. Hey, I'm AskAngelaLin, international best-selling author. And if you're like me, when I first started investing 12 years ago, you might be overwhelmed and confused. Do I invest in stocks, mutual funds, index funds, bonds? What do I do? There's so many options, I don't know where to start. I'll tell you what I wish someone told me 12 years ago when I first started investing to avoid the mistakes that I made, and nobody in my family ever had success with the stock market. And so, if you're like me, I had no idea what I was doing.
Angela, you never listen to me. I know what's best for you. Okay, you like money. You can save it, put your money in the bank, or you can put it in mutual fund. They take care of it for you. They're charging you way too much fees and you're just not getting the returns. I put money in financial advisor. They take care of it for me. Yeah, but Mom, I'm a CPA and I've audited small companies to $100 million companies, and financial statements are really complex. It's really hard even for accountants to understand. They smart, you not. I've also been a VP finance of public company. I know financial statements, okay? Angela, I know what's best for you, okay? You listen to me.
So I read a lot of books. I would try and pick individual stocks, taking a lot of time trying to understand their financials. For the first 2 years, I did well. I had more than 25% returns each year. Then I learned the hard way of losing $20,000 when I was still in university over the next 2 years. So I want to help you avoid losing lots of money and the mistake that I did. Because it's hard to pick that perfect stock, which you won't, I promise, been there, done that. But guess what? Most of the financial professionals can't do better than you or a monkey in terms of getting consistent returns. 96% of mutual funds actually never beat the market. And the market's something general like the S&P 500 stock index. According to Delbar, one of the leading industry research firms, over 20 years from 1993 until 2013, the S&P 500 returned almost 4 times as much as just the average mutual fund investor. So what do you do instead? You can invest in some mutual funds. 4% can beat the market, or ETFs or index funds, where you don't have to pick that perfect stock. You can own 50 or 500 of the biggest and best companies. You don't have to know when it's time to buy and sell and spend all that time and effort trying to research all these companies. I got an average annual return of over 18% per year for the past 5 years since I started investing in ETFs and index funds for my stock market portfolio. I'll show you 2 investment plans and you can decide which one works better for you. The reason why you just want to have 2 investments right now, especially when you have just $1,000 or little money, it's because you want to keep buying costs low. And if you're spending all this money buying up different types of investments, it's not likely going to give you a really high return to offset all those buying costs, which actually can reduce how much you eventually end up with, because all those buying costs is going to eat away at your investment. Make sure you watch to the end of this video to get my free checklist that will give you the 4 ways to invest your $1,000 and make it grow to up to $1 million. Each of these investment plans will have only 2 investments. One focuses on growth and the other security. You need to have a balanced diet within your investment plan, just like you need to eat different types of food to be healthy so you can live life on your terms. Part of it will be stocks, which are shares of ownership in a company. And this is focused on more growth and higher risk, higher rewards, potential higher loss. The other will be on bonds, where you loan money to the government for a set period of time and interest. So the government will give you interest payment during the time of this loan, and then at the end, pay you back your full principal that you gave them. This is focused on more security, lower risk, and also lower returns. But there's also less chance of you losing them. If you're more focused on growth and okay sleeping at night, where you might lose up to 36% of your investments like in 2008, in just 1 year. But if you held on and didn't sell, then you got rewarded with almost doubling your money 8 years later. Then you can use the Warren Buffett plan.
What is Warren Buffett?
If you don't know Warren Buffett, he is one of the world's greatest investors and 4th richest person in the world according to Forbes. He's had annual consistent returns of more than 20% over the past 50 years. This is what he'll use for his wife and their trust once he passes away, for his wealth to continue growing and do good in the world through nonprofits and helping people. He said put 10% in short-term government bonds and 90% in a very low-cost S&P 500 index fund. Low cost means low fees. S&P 500 means the 500 biggest US companies as chosen by Standard & Poor's of how much money they're worth.
Buffett, good deal?
If you focus on more security, where your main concern is not to lose that money and you're okay with lower returns to guarantee that value, then you can use the Jack Bogle plan. If you don't know who he is, Jack Bogle is one of the 4 investment giants in the 20th century, according to Fortune magazine. He is the founder of the Vanguard group.
He a security guard for a bank?
Which is one of the world's largest investment management company with over 3 trillion in assets under management. That's right, trillion. He is the creator of low-cost funds and personally invests in these low-cost funds that are offered through the Vanguard group. The plan that I'll share with you is what he said would be good for the average investor in Tony Robbins' book, Money, Master the Game. So 35% in US intermediate term bonds, which are anywhere from 5 to 15 years, and then 65% for US stock index. US stock index means it changes based on the changes of all the companies listed on the US stock exchanges. Post in the comments below and let me know, are you more growth focused or security focused, and which investment plan you're going to use? And also post as to what is your biggest question about investing so that I can create even better videos to help you and serve you. If you like this video, click below to subscribe and make sure to get your free checklist of how to invest your $1,000 and grow it to $1 million. You can get the link below this video so that you can take action and start getting results. Until the next video, thank you so much for watching, and here's to you living life on your terms.
Alright, how do we put this on? Putting on the wig. Oh, this is just. Is this working? It's working? Oh, wait. Gotta put my hair in.